Hey there, ladies. You guys will have to excuse my terrible lighting we are in the process of building, and I do not currently have an office or a place with good lighting, and all the things are still packed away. So thank you guys for having me here today. I am Katie Fisher, owner of Creative Balance. I am a bookkeeper, VA, and financial coach, and I'm here to talk to you guys today about tax time, inventory, all the good things. So first, let's talk about deductions, and then we'll kind of get into some of your guys' questions. And I think here we go. We'll get into some of you guys' questions. Okay, so here is a list of deductions for your business. So common things that would go under the advertising category are your website, social media ads, business cards, trade show signage, craft fairs, things like that. So advertisement, if you run Facebook ads, Etsy ads, any of that, it would all go under advertising. That category is pretty straightforward. Taxes and fees, this is where your business license would go. This would not be where any taxes that you have paid or estimated tax payments go. Those would need to be put in a separate category for your accountant to be aware of. Okay. So any permits or licensing that you've gotten, that will go here. We're going to skip over cost of goods sold right now. We're going to come back to that because that's our most complicated category. So fees and subscriptions, this is where your Etsy listings would go, Canva, Photoshop, any of that can go in fees and subscriptions or under office, home office. But once you pick a category, you need to keep it there. I typically will put Canva, PicMonkey under advertising for most of my bookkeeping clients. I normally will put Canva under there because that's primarily what it's used for. However, if you're using it to create like printables or something like that, you would more than likely put that under your home office expenses or cost of goods sold. So I know that kind of can be a little bit confusing, but a safe bet is to just put it under advertising since most of you guys are creative business owners. So any business subscriptions like this membership that you guys are in right now with Melissa, anything like that will go under fees and subscriptions. Interest fees, this has to be only for business related purposes. I know right now a lot of people are using Shopify Capital and PayPal Capital. And so the interest that you're paying on that capital advance would go under interest fees. Rentals, if you rent any equipment or you rent a storefront, that would go under rentals. Insurance, you should have a business policy on your business assets, and then a general liability policy if you're providing a service in someone's home. Professional services, so this is where your accounting, your bookkeeping, any LLC or legal consultations, trademarking, anything like that would go under professional fees. Auto and mileage. This more applies to like service-based businesses, but you guys are still running to the post office. You guys are still running to pick up supplies. All those things can go under auto and mileage. So just kind of follow these categories. For this, make sure you break it out and make sure you keep track of your mileage. So I just use my handy dandy planner. I actually use QuickBooks now, but for we have a service-based business, and then anyways, we have a couple different businesses. We have a construction business, we have my business, and then I have a creative business. So I'll just write it in my notebook that I went to Hobby Lobby that day. I'll just write it in my planner. But we use QuickBooks mileage tracker for our construction company, and it works amazing. So home office expenses, this would be like your postage, shipping. You're going to put that in a separate category, especially as creative business owners. So I know that like postage is applied here, but that's more for a service-based business who's only buying stamps. If you're buying shipping all the time and that's a large expense, you're going to want to create a separate category for that to track your shipping separately. So this is going to be like your postage, your stamps, your software, your mailer envelopes, your phone and internet. And make sure phone and internet, you keep that separate. Don't bolt that together, but all the rest of those can go under one category. So labor, this is going to be if you're paying commission, wages, or a subcontractor. So a subcontractor would be like a VA, a bookkeeper, a Pinterest manager, a social media manager. That would be your subcontractors. Wages would be an employee who you're paying a W-2, who you're having come in hourly, and you're telling them exactly what to do, when to do it, and how to do it. A subcontractor is, hey, this is the task I need you to complete it, by this deadline, and you don't set hours or restrictions on how they work. Bank fees, pretty self-explanatory. Again, these can only be business-related bank fees. So if you're connecting or intermingling business and personal transactions, make sure that you are not doing so. Okay, education. So again, this can be like professional development, conferences, trainings, workshops, courses, anything that you're doing that directly ties to your trade. So it has to be directly tied to your trade in order to be tax deductible. Business use of home, again, pretty self-explanatory. This has to be the area used exclusively for business. So it cannot have a dual purpose. I have like a little alcove right here, but it's connected to our living room. So for tax purposes, I can only deduct this like little alcove right here that's used exclusively for business. I can't deduct the entire room that we watch TV in. So hopefully that makes sense. And each of these categories needs to be tracked and kept and recorded separately. Okay, so let's get back up here to cost of goods sold. So this is going to be your materials, your supplies, your Hobby Lobby runs, your paint, your vinyl, your shirts, your fabric, whatever it is that you're making. This is where it's going to go under cost of goods sold. Now, this is where things get a little bit confusing because you're going to have what's called a straight line deduction, and that is your cost of goods sold, your supplies, your materials, whatever you want to call them. For tax purposes, they're called cost of goods sold. You're going to have that deduction. Okay, so that is going to be all of the things that you purchased and used within that calendar year. Okay, so here's where inventory gets a little bit tricky, where things get a little bit tricky, and it gets a little bit even more tricky once we add in the state laws and regulations. I'm not super familiar with all of the state laws and regulations, but they do vary, and I'm going to give you guys a list of the states that charge inventory tax, which is what your guys' main concern was. I'm in Missouri. We don't have inventory tax. Federally, you don't have inventory tax. For your federal taxes, what the IRS cares about is that, say you are a shirt maker and you purchased 10 shirts, only sold 5, you have 5 left. You are going to claim 5 of those as cost of goods sold, and you are going to claim the other 5 as inventory. Pretty simple, right? We can count that, that's tangible. So the things that we can't count, so I don't really know what you guys make, but let me use a sheen of yarn, for example. So I have sheens of yarn back here. Let me just show you this. Okay, so I have 2 sheens of yarn. This one obviously is used, has a crochet needle in it. This one is not. This would count as cost of goods sold, and I would deduct the entire thing. This would count as inventory because it still has a label on it and I've not used it. This is cost of goods sold because it's been used, even if only a little bit of it has been used. This is cost of goods sold. This, none of it has been used, so it's considered inventory. Same with the bolts of yarn or fabric. Say that I bought 2 yards of fabric and I cut an inch off of that bolt of fabric. Now that bolt of fabric is cost of goods sold. But say I have a bolt of fabric that I haven't used, I haven't cut anything off of it, that is now inventory. Okay. I don't know if I'm thankful for this or not thankful for this, but it was a great learning experience. In 2016, we were audited, and I had the opportunity to discuss this firsthand with an IRS auditor. And she said, at that time, I was making t-shirts, and I was like, look, how do I calculate my vinyl? That's just completely unrealistic. Like, there's no way. And my yarn, so that's primarily what I make, is t-shirts, and then I crochet Cabbage Patch wigs. And I was like, how am I supposed to calculate that for inventory purposes? Like, do you want me to weigh it? Like, I don't understand what you're wanting me to do. I can, I'm really good at math, but I can't do that kind of math. Like, I don't know what you're wanting. And she's like, no, if it's been used, if it's had an inch cut off of it, if it's had a centimeter cut off of it, it is now cost of goods sold. If it is unused in the package, it's considered inventory. So for inventory purposes, they just want to know, hey, what you bought in 2020, and what you're going to be carrying over. So for tax purposes, all they want to know is what you had on hand at the beginning of the year and what you had on hand at the end of the year. So at the beginning of the year, say that I had 10 skeins of yarn. I sold those 10 skeins of yarn, no big deal. I don't need to track them for tax purposes. Done, out of the way. But at the beginning of the year, I had 10 skeins of yarn. But at the end of the year, I just stocked up because I had a huge order coming in, right? And now I have 10 more skeins of yarn. So those 10 skeins of yarn that I just had purchased will count as inventory. If I haven't opened them or made anything with them on December 31st of 2021. It's regularly 2021 already. So if on December 31st, 2021, anything I have on hand that has not been turned into a product will count as inventory. So what if I have all these things that have been turned into products but haven't sold yet? What the IRS told me is that if it's easily calculated, if the cost of goods that went into that product are easily calculated, then subtract them as cost of goods sold. If they're not easily calculated, then if they're not easily calculated, subtract them as cost of goods sold. If they're easily calculated, sorry, I probably messed you guys up there. If they're easily calculated, then add them as inventory. Pretty much, and the reason she said that it eliminates the margin of error when you just take it as cost of goods sold rather than trying to divide them out by unit. But she said if it's something that's easily calculated and you can quickly and easily and accurately divide them out by unit, then divide them out by unit and subtract them or log them as inventory. So what happens once that product is sold, that material is now used, then you will now track that item as inventory. So let's talk about the state side of it. Like I said, I don't know a whole lot about this, but I do know that one of the members of this group had to pay something called inventory tax. Now, based on that statement, I'm going to guess that she probably lives in one of these states: Texas, Oklahoma, Louisiana, Arkansas, Mississippi, Kentucky, Virginia, West Virginia, Maryland, or Vermont. These states have inventory tax, and states that have a partial tax inventory are Alaska, Georgia, Michigan, and Minnesota. I don't know a whole lot about that, other than they're going to charge you taxes on an additional state taxes on any inventory that you have on hand. So you guys need to go, and I will attach this for you. It gives you an amazing information about what you should know about your state, kind of like what you should be prepared for. So if you're not in one of those states that I just named off, you don't need to worry about the state inventory tax. However, if you are in one of those states, Addie, have you checked the cookies? Did you put those in the freezer first? Yeah. Okay. Okay. It just smells, so. Sorry, I thought that I paused the recording, but I did not. I paused the screen share. So disregard all that. We're baking sugar cookies and I thought that they were burning. So I apologize. Super professional here, Katie. Get it together. So I will attach this link for you guys as far as state taxes. It does say that like Louisiana is one of the worst when it comes to state taxes. So what I would suggest in that situation is that you consult a local local CPA. If you are in one of those states that charge state sales tax, you guys really need to be working with a local CPA so you can learn how to reduce that tax liability. So again, the 9 states are Arkansas, Kentucky, Louisiana, Maryland, Mississippi, Oklahoma, Texas, Virginia, or West Virginia. So if you are not in one of those 9 states, then you do not need to worry about state inventory tax. There's no federal inventory tax. Just for federal purposes, you need to be tracking these deductions as they are here, and then tracking inventory as I explained earlier. State regulations and state laws are a little bit different. So it does say that there are 5 additional states, Alaska, Georgia, Minnesota, Michigan, and Vermont, that have a partial inventory tax based on businesses. So each of those states are going to be different. I currently help a client in Texas, and her inventory tax is not terrible. So I would check with a local professional because they're going to be more well-versed on that inventory tax. So remember, all of these things apply to federal taxes, but state taxes can be a little bit different, and each state has different laws and regulations. So it's always best to go and check out your state website. I will attach this website. I'll send it to Melissa so she can attach it to this video for you guys, or I'll put it in the comments of the video so you guys can watch them. And if you have any questions, feel free to reach out to me. Feel free to check out my website or shoot me a message. I'm happy to set up a time to chat with you guys. I am no longer a licensed tax professional. I was for almost 9 years. However, now I'm currently doing bookkeeping via MBA and financial coaching. So if you need a bookkeeper, I'm happy to help you there. Or if you need a VA, I'm happy to help you there. As far as taxes, I highly suggest that you guys reach out to a CPA, EA, or tax professional in your area. Try to avoid like the H&R blocks, places like that, just because they're not super familiar with business taxes and business tax law. So sometimes you may not get the most benefit from not working with a small business accountant. So hopefully this was helpful. And remember, if you guys have any questions, feel free to reach out.